All right. Well, who else we got here? BG Senior. What's up, everyone? All right. So we got a new camera on Facebook, but it still looks a little on the dark side. I don't know. Scooter's here. We can get the party started. Hello. Hello. I don't know. Is it? We're all trying down the biggie and missing person. Alright, Instagram, this is just, I gotta adjust the cameras, they're not quite right. David Martin, Steven's here. RS, Steven. JD Baby, you're in Perth, holy cow. Alright. No, that's fucking not looking like that. Dana, Dan, Devin Brownie. Alright, cool. Today was, what's today? Today was Thursday. Cool, it's not tomorrow, Friday, the weekend's tomorrow. Cool beans. Alright. Alright, we gotta get a lot more people now, 25. Well, the setup's getting better and better. I'm getting a little bit more light. Not a huge amount of light, but it's getting there. 38. Wow, what time I gotta turn off already? Reboot already. This is crazy. 44. Gotta wait for that number to move on up. Where's my book? Here's my book. We stopped off last night at WBH Walgreens. Let's take the end of that real quick. Walgreens. Walgreens. Here we go. JD Baby. Alright, JD Baby. Cool beats. Alright, so it's 5 past 9. Let's crank it on up until 11:30. See what we can do. See what we have cooking today. We got nobody over here on YouTube. We got 74 here on TikTok so far. Gotta get that number a little bit higher. You guys gotta like, subscribe, all that kind of nice fun stuff. Make this number go up a little bit higher. Get more likes, gonna attract more views. Hey, Mikey G's here. Alright, Mikey G. Timothy David. How's it going there, Timothy David? Alright. First one we're going to look at tonight is going to be Walgreens. W-A, right? Now, we didn't get to it last night, so we're going to get to it tonight. Now, first thing we always want to check is the numbers over here. Can we see these okay? No video on YouTube. It looks like it's live. It's right there. Now, let's try it again. Alright, that's not working. Give me a second, I'm trying this thing out. Alright, here's this one. Is that? Holy shit, I got a bald spot in the back of my head. I never saw that before. Alright, that one over there is working. This one. Alright, that one's not working. Oh, come on. There it is. Yeah, that one's lovely. Okay. There we go. We got it now. Thanks. Alright, got it now. Alright, see, that works. Just took a little bit to get there. Only 47. Alright. We're going to reboot and try this thing over again. Don't go anywhere. Okay? I reboot to like 40 people. That's just ain't working for me. It's a Friday night. Let's try this one more time. Let's try this one more time. Alejandro, Voodoo Donuts, Marty, Cher, Roma Instant, probably big joint. Might consider again, Mickey. And now, alright. Let's get rolling. Let's get rolling. Yeah, Little Lakes track. I like to make sure it says good for money. Makes it worthwhile. Anything less than 100 people, not really looking to get people. Hey, School of Thoughts. How's it going today? Alright, let's just get started. Abigail, okay, it's Thursday. Is today Thursday? Hey, no, it's Thursday. There should be a lot more people on Thursday night. Really? 17? Wow. SoFi. Why do people like SoFi? Alright, let's pick on SoFi for a while. Okay? SoFi. I don't know why. Alright, take a look at SoFi. I can buy it tomorrow morning $7. The $7 go for 20 cents. That's huge. Okay? But let's see how many dividends they pay out. We're going into Yahoo Finance. Now this is live on YouTube if you guys want to be able to see, because it's kind of bright on the phones or whatever. Okay, so let's go back down here. No dividends. Why would I invest in something that doesn't pay me profits?
When things go wrong when the scent of her lingers and temptation strong into the boundary of each married mind. Sweet deceit comes calling and negativity lies. Cold, cold heart,
So I had a little bit of money
heart done by you.
So
Some things look better, baby, just passing through. And it's no sacrifice, just a simple word. It's two hearts living in two separate worlds, but it's no sacrifice, no sacrifice. It's no sacrifice at all. Mutual misunderstanding after the fact. Sensitivity builds a prison in the final act. We lose direction, no stone unturned, no teacher to damn you when jealousy burns. Cold, cold heart, heart done by you. Some things look better, baby, just pass.
all right, that should have taken care of it. All right. Okay, so let's go back to Walgreens, WBA. All right, what's 69? Come on, you guys. Got to like, share, comment, all that kind of nasty fun stuff. Got to get the number up over 100. I like it to be over 100. Your music is loud on YouTube. Oh, yeah, but Mike, is it gone now? Because I turned it off. PG, Procter & Gamble. No, so loud. All right, that should be a little bit better. And back to, here we go. All right, that better, Mikey G? The delay. Oh, yeah. Okay. Secretariat. Here's a comment. WBA, it's time to stop falling and go back up. I don't know how well that's going to do. All right, so, okay, that was SoFi. I don't do SoFi. They don't pay dividends. It's a no to me. It's no ever since the first time you offered it. It's a no now, and it's always been a no. No, 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 no. No to SoFi. Okay, if you guys like it, you guys do it. I won't do it. All right, let's go back to Walgreens, WBA. WBA. All right, here we go with Walgreens. You ready? Procter and Gamble. PG. Yep, PG's on the list. Okay, we'll take a look at that. All right, let's go back. Take a look at Walgreens. First thing I want to look at is over here. I gotta open this up a little bit more. 1728. You see that number right there, 1728. That is the ass. That's what I can buy it for. The 1750s. Check it out. 22 cents. That's more than 1% for next week. If you like Walgreens. I like Walgreens. Walgreens is one of those companies I buy just because. Now, whether they have the dividend or not, totally irrelevant for me because they have a great premium. Every week, higher and higher premiums. It works great for me. All right, anyway. But I do suggest you do your own research. All right, do your own research, do your own due diligence, make sure it makes sense to you. Hey, Walgreens has been in business for years, decades. Okay, they're in almost every major city across the United States. Why would you not buy it? Like CVS, Walgreens, Walmart, McDonald's, Chevron, ExxonMobil. Why aren't these on your list? I can't answer that one for you, okay? So let's take a gander. All right, so we know that it's over 1%. Great, I like that. So now let's take a look at the chart. First thing I want to see when I look at the chart is, where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it now? Okay, so she's down at the bottom at the moment. But how far down is she going to go? This is Walgreens we're talking about. They're in every major city, all right? And with the older generation getting older and older and relying on those, what do they call those things? Those pharmaceutical crap. Where are you going to get your pharmaceuticals? Walgreens, CVS, Walmart. I don't know what other ones are. I don't take any drugs whatsoever, so if I have to take them, someone has to force feed them to me. All right. All right, so let's take a better look at the numbers. A year ago, we're at 3151. The high of the year was 3296. We ended up the year at 2693. Okay, so the last 90 days. Okay, very first thing I want to look at for the last 90 days. This is the 90-day chart. Okay, I want to see the high. I want to see the low. Where was it? Where is it? One of the questions you got. What's your thought on tomorrow's trading? Luke, we won't know that till tomorrow. Now, tomorrow is Friday. I don't jump on in the morning. I only jump on at night. Why? W-Y-N-N. We're going to take a look at that one because we actually have that one. I actually do have some W-Y-N-N. So we'll take a look at that again. W-Y-N-N. All right. We'll take a look at that again. Cross this one off the list. Okay. So, the 90-day chart. 90 days ago, here we are now. Okay, nice slow slope to the downside, drops down, went back again. Today is actually the bottom again. Okay, another bottom. What's your prediction on the SPY? All right, look, I don't do spiders at all. Don't. Dividend stocks only. Okay, if anything happens, I want to be reassured that I'm getting a higher and higher dividend. Okay? Every single year, I want a higher and higher dividend. I want more money for my money. Does that make sense? I want more money for my money. That's weird. Okay, last 30 days. Same thing. Almost the exact same. 30 days. High 30 days ago, low today. So today is the bottom. Okay? Now, we thought yesterday was the bottom. We thought last week was the bottom. We thought a week ago was the bottom. But it's been floating around here. So let me read some of them to you. Okay, today's bottom was 1713. Yesterday, 1737. Day before, 1725, 1724, 1728, 1725. Okay, it's not dropping below 17. It's saying 1713, 1725, 1724. It's not going any lower. What's your top pick then for dividends? But evidence pay a little except investing tons of money. So you don't do options only rate stock. No, I do options. Okay, I buy a stock. So you just got here. Okay, Beach Chillin' Zen, is that right? Guidance, you just got here also. Luke Anthony's Siscare, and you just got here also. I meant dividends is not that much. Okay. Now, you guys just got here. You last three I just labeled up. How would you play WBA tomorrow? All right, we're going to get that in a second. All right, for these three that just showed up here, I do dividend stocks to collect a weekly 1%. Yeah, I collect 1% per week using good quality dividend stocks. And those are companies that increase their dividends consistently. Okay? You don't know English, I wouldn't be worried about dividends. That's a horrible thing to say, but okay. What I do basically, it's simple. I look for a good quality dividend stock. Once I find a good quality dividend stock, I want to find out a couple of things. Number one is, what are they paying their dividend? I take a look at the calendar. All right. Now, when they're getting ready to pay their dividend, I buy it 2 weeks before the dividend. Why? Because stocks always go up before the dividend. Ooh, that battery's getting low quick. Let's switch over to there. To here. Facebook. Ooh, yeah, that one's getting warm. Alright, that just didn't work out right, did it? That's horrible. I don't wanna talk about it. Let's try it again. There we go. Alright, so as I was saying, thank you, I didn't know that, AJ. I'm in my 20s. Why should I focus on dividends instead of growth? Dude, I really couldn't tell you. Seriously. I need financial help, Breezy. I'm tired of working with 2 jobs. Please teach me, and I'll give you 8%. Oh, that's very nice of you. All right, so here's the thing. Now, for those of you guys that are new here, all right, this trading strategy I'm about to teach you was created for my 9-year-old daughter. It had to be simple. It had to be safe. It had to be predictable. It had to be consistent, and no way she could lose. 5 criteria. How did I overcome that 5 criteria? 1, never buy something you do not want to own. Okay? Never sell at a loss. Make sure the company has 20 years of increased dividends consistently. Okay? Weekly options. Never buy something you don't want to own for long term. Never sell at a loss. Make sure it has 20 years of increased dividends and weekly options. And then make sure the numbers work. First thing I want to look at is the calendar. When are they paying their dividend? Next thing I want to look at, what can I buy at first thing in the morning? Okay, you have the last trade of the day, the bid, the ask, the volume, the open, the high, the low. Okay, all the numbers right there. I don't make these up. These are someone else's. Which stock pays well? Yeah, okay. SCHD, we're going to go into that in a little bit. But let's go back. I'm missing some of these questions. Okay, Ibuprofen? That's a weird, Ibuprofen. All right, anyway, I look for this. When am I buying it tomorrow morning? 1728. The 1750s is the closest strike price. This was going to be called a covered call. Where I buy the stock, I sell the option against it. Okay, if I'm buying it at 1728, I'm allowing someone else to buy it from me at 1750. It's a little bit more than I paid for it. They are then, in turn, giving me 22 cents per share. What does that mean? Well, let's break out the calculator. The calculator, clear, 22 cents a share, that's my profit right there. All right, I get that first thing in the morning as soon as I sell the contract. Okay, 22 cents a share, and the purchase price, $17.28, divided by 17.28. Comes to a grand total of 1.27% for the week. Okay, so this is Walgreens. Okay, so you ask yourself a question, do I like Walgreens? Do I want to own Walgreens? Now, Walgreens has given me a nice 1% or more every single week since I've had it. Okay, I'll just keep rolling it over 1 week at a time as long as it's over 1%. Now, 1.27% per week. Now, you do that 52 times a year because there's 52 weeks in a year. There's 52 weeks in a year. You're going to walk away with 66%. Okay? Safe, predictable, consistent 1% per week. Nothing but pre-qualified dividend stocks. Those are companies that have increased their dividend payments to their shareholders for 20 years or more. 20 years or more increased dividend. Why would I want? Question for you. Ibuprofen. I have no idea what that means. Ibuprofen. You're in your 20s. Why would you want 66% per year? I have no idea. Why would you want 50% per year? I have no idea. You're in your 20s. You can shoot for the fence. I'm retired. I don't work anymore because I don't feel like it. I started working when I was 13 years old. Okay? 1974. Okay? I started working in 1974. I've been working. I just retired last year. 60 years old. Great. I have a little bit of money set aside. I make 1% every week. That pays for all my bills. Okay? Not have to worry about it. However, you guys got to figure out what you guys want to do on your own. Does it make sense? That's number one you have to think about. Does it make sense? Walgreens, been in business for over 50 years. They've increased their dividends consistently year after year after year. They're in every major city in the United States. They're doing pharmaceutical drugs, prescription drugs. Why wouldn't you own that? It's a no-brainer for me. Anyway, let's look at some more questions. Okay, Breezy, you need financial help? My suggestion is sit back, chill, see if this makes sense. Okay, safe, predictable, consistent, 1% per week. That's over 50% per year. Means you can double your money every 16, 17 months. Every year and a half, you can double your money. Thank you. I didn't know that. All right, AJ. Dividend stocks are fractional, right? Some of them, yes, you can buy fractional shares. Do you like SCHD? No, I do not. Would you suggest a group of single stocks? Now, let's take a quick look at SCHD, and I'll tell you why I don't like it. SCHD. Okay, a couple of reasons. Number one, it is a monthly optionable stock, which means if I want to do covered calls against it, now covered calls are one of the safest trading strategies there is. Point blank, it is one of the safest trading strategies there is. You can do it in an IRA if you wanted to. It's safe. You buy the stock, you're selling somebody the right to buy it from you at the same price you paid for it. So you're really not having very much risk. But there is some risk. There's always risk to invest in. Now, the reason why I don't like monthlies, there's only 12 months in the year, which means I can only get a potential 12 checks per year. 12 months, 12 checks. 52 weeks, 52 checks. This is why I don't like most ETFs. Most ETFs have monthly options, and here's another reason why I don't like ETFs. Now, let's go over to Yahoo Finance, SCHD. Now, this screen here is live on YouTube, so you can actually see all the numbers and everything I'm doing. Yeah, it's a little bright here on the cameras, only because I'm still trying to iron out the kinks, okay? Usually I'm up in the Boston area, have a nice little setup up there. But while I'm down here visiting my kids in Florida, I have to deal with what they have. All right, so SCHD. Summary. All right, SCHD is an ETF. Look at the yield that they're offering. They're offering 3.47. 3.47. Okay, now I like 1% per week. 1% per week is 50% or more per year. SCHD is offering you 3.4%. You're better off with 6-month U.S. bonds. They're paying 5% or 6%, I think. Hell of a lot better than SCHD. But here's another reason why I don't like it. We're going to come over to here, over on this side, holdings. We're actually going to see what is inside of this, this ETF. All right, Texas Instruments, Chevron, Lockheed Martin, Pepsi, Coca-Cola, UPS, Verizon, Amgen, Cisco, Pfizer. These are just the top positions. Okay, so let's take one. Let's take Texas Instruments and Chevron. CVX, a 165. All right, Chevron. Let's take a quick look at Chevron. Okay, right now it's at 165.78. If I buy it at 165.78, I sell off the 165s, I'm getting 1%, I'm losing a little bit, I'm getting, not quite. That one doesn't quite make the 1%. Okay, so TXN. Okay, Texas Instruments. 186, I'm looking at the 185, the 187s, that's a little over one, not quite 1% either. What else do we have in there? TXN, Lockheed Martin, Pepsi, Coca-Cola, UBS, Pfizer. Look about Pfizer. Pfizer's a good one. Pfizer and Cisco. PFE. 28. All right, check it out. This is Pfizer. This is one of the companies that inside of SCHD. Pfizer, 28 bucks. The 28 is going for 44 cents. That's over 1%. All right, let's find out exactly. Now, if I buy it at 28.16, I sell it at 28. I'm losing 16 cents right off the top. So I want to take the 44 cents and subtract 16 cents from it. Does that make sense? 44 cents, subtract 16 cents. All right. If I'm buying it 28.16, okay, the last trade 28.18, the bid 28.11, the ask 28.16. So if I want to sell it tomorrow morning, the market maker will give me 28.11. If I want to buy it tomorrow morning, I have to pay 28.16. All right. If I sell it, why isn't this thing charging? I'm having an issue. I hope that ain't gonna work. Here we go. Excuse me for a second while I try to figure out why this one is not charging. There we go. Now she's charging. Lovely. Now we're back to 0. Damn it. All right. Right there. All right, back here again. All right, you're just gonna have to deal with it, Facebook. Sorry. Which stocks paying well? We're gonna get to that in a little bit. Which platform are you using to trade? What's the platform? The platform is Sky, SPY. Yeah, it's Thinkorswim. Okay, it's through Charles Schwab. Okay, let's get back to the example. Okay, people on Facebook, they just have to deal with it. All right, so we're looking at Pfizer. Now, you wanted to know what I thought of SCHD. Okay, SCHD Holdings, it's an ETF offered by Charles Schwab. Number one, they're only offering 3% yield for the year. So if you're going to dump your money into SCHD, they're offering you 3%. That's crazy. Okay, U.S. Treasuries are offering 5%. All right, so Texas Instruments, Chevron, Lockheed Martin, Pepsi, Coca-Cola, UPS, Verizon, Amgen, Cisco, Pfizer, and a bunch more. Those are just the top holdings. We're going to take a look at Pfizer at this moment. And I'll give you another reason why I don't like it. Okay, so if I can buy it 28.16, I can sell it at 28. I can sell it at 44 cents per share. That's the premium. Okay, to give somebody the rights to buy it from me. What do you think about buying a stock after negative earnings? I don't pay attention to earnings. Seriously, I don't. I've seen positive earnings. Positive earnings where the stocks go down. I've seen negative earnings where the stocks go up. They just are not consistent with their predictions. Okay, you think positive earnings of stocks will go up. No, it doesn't work that way. There's no real rhyme or reason. 59, come on, guys. You gotta like, share, subscribe, all that stuff. We're gonna reboot it. This thing drops below 50. Okay? So as we're looking at Pfizer, okay? Pfizer, like I was saying, my profit, 44 cents. I'm subtracting the 16 because I'm buying at 28.16, selling it at 28. I lose 16 cents. So I take it off the profit. Now I'm at 28 cents. That is 1%. Okay? 28 cents is 1% of $28. So I'm making 28 cents. And that's for the week. Okay? You do Pfizer just 3 or 4 times, and you already made more than SCHD is going to offer you. Okay? People buy into earnings and then dump after. That's why they go down and after positive reports usually. Okay, Jeremy, thank you for that. Okay, although I see earnings first thing in the morning, okay, and then by the afternoon the stock goes down. I also see positive earnings, but the stocks go up. There's no exact science to the earnings. Okay, you would think, okay, if the company's profitable, it would go up. It doesn't always work that way. That's why I don't pay attention to the earnings. I only pay attention to the dividends because those, once the company announces they're going to pay out a dividend, then they have to pay out their dividend. That is consistent. Stocks have a tendency to move up just before the EX date, which is the dividend date. Okay, that's why I like dividend stocks and buying them just before the dividends. All right. So that's why I don't like SCHD. I don't like very many ETFs. Debbie! I don't know who Debbie is. Sorry, Mark. Mark Sherman. True. All right, so let's actually look at something that we are going to like. Now, we already did Walgreens, so Walgreens is off the list. Next on the list is NEM. That's Newmont. Okay, so I don't know if you guys actually heard of Newmont. NEM. Okay, first thing I want to see is what can I buy it for? $42.98. 43, check it out. If I buy it at $42.98 tomorrow morning, I can sell a covered call for someone to buy it from me at 43 and collect 74 cents per share. What happened to when it stopped dividend? What's the reason? Well, Lion 983, okay? Usually when a company stops paying dividends, yeah, it drops off my list. However, if you're sticking with companies that consistently increase 20 years or more, you're getting into what's called the dividend kings, the dividend aristocrats, the dividend champions, the dividend contenders. Companies that their sole purpose in life is to make their shareholders happy, so they continuously increase the dividend payments. SWBI, it's going to be a no again, because SWBI sounds like another ETF. Sorry. Where are we? Oh, so we're on NEM. Okay. Newmont. Okay. 42.98 to 43, 74 cents. Let's see what that number looks like. 74 divided by the purchase price, 42.98, and that comes a grand total of 1.7% for the week. 1.7. That's huge. All right. Now, Luciano Salvatore, ¿qué pasa? All right, PFLT moves are steady, pays monthly dividends. Okay, so what are we thinking about that? PFLT. I'll write it down. We'll take a look at it in a little bit. PFLT. All right, we'll take a look at it in a little bit, all right? Right now, we're looking at NEM. NEM, or Newmont, okay? They're offering a 1.72% yield for 1 week, all right? Apparently, this guy has never heard of accrued interest. Oh, risk trees. Loan out shares, yes or no? No. What about REITs? Some yes, some no. But to answer your question about accrued interest, who said that? Let me find out where that is. It's not dividends. All right, what happened with stuff? We got that question, we got that question, we got that one, we got that one. Okay, risky trees. Apparently this guy has never heard of accrued interest. I'd like you to explain that to me a little bit more. Okay, now, however, I do know that you're new here. This is the first time I've ever seen your name up on my screen. This trading strategy right here that I am showing you was created for a 9-year-old little girl. 1 second, I will show you her. Okay, it's my website. There's that, and my YouTube channel right here. Okay, videos, the oldest.
Hi, I'm JC, and being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and
I think just. All right. That's me 12 years ago. It was my daughter 12 years ago. That video was made 12 years ago. Standing in front of a whiteboard with a calendar in the back because we didn't have all this fun digital stuff that we have nowadays. So, accrued interest. So let me ask you an interesting question on that one. All right. Now, I don't know about your 9-year-old daughter, but my 9-year-old daughter, I love her to death. She wasn't the sharpest knife in the drawer. She wasn't the brightest bulb in the tree. But I love her. It had to be simple. It had to be safe, predictable, consistent, and no way she could lose. So I've heard of accrued interest. I've heard of a lot of stuff. I could go over mathematical equations and trading strategies that would probably blow your mind. But I'm not going to do that here. Why? This strategy here, simple, safe, predictable, consistent, and no way to lose. Okay, that 5 criteria, never buy something you don't want to own for a long period of time. Never sell at a loss. Make sure it has 20 years or more of increased dividends and weekly options, and then make sure the numbers work. The numbers. What am I buying it for? What am I selling a covered call against? That's just one part. Then I want to come over here and take a look at the charts. What do I mean? The 1-year chart. Where's the high? Where's the low? Where was it a year ago? Where is it now? That's the 1-year chart. Then I want to come down to the last 90 days. Then I will do the exact same thing. Where's the high? Where's the low? Where was it 90 days ago? Where is it now? Are there any patterns? Yes, there are. Look, down, up, down, up, down, up, down, up, so on and so forth. Then I want to go to the last 30 days. Now, the last 30 days are the most important. Why? Well, because the last 30 days tells me whether or not I should get in or not. Okay, 30 days ago, here we are. The 30-day bottom right there. The 30-day top right here. Now, from the 30-day bottom to the 30-day top, there's only one 30-day top and there's only one 30-day bottom. So after the 30-day top, she drops, makes a new bottom right here. After that, she moves to the upside. Great. Not much more space here. I wouldn't jump it now, but I already jumped in, so I already own it. So I bought it at, what the hell did I buy it at? Not that account. Not in that account. Not in that account. Damn. Well, I guess I didn't buy it. Well, I was going to buy it. But anyway, if I was, I would have jumped in right here on Monday. Okay, I would have sold somebody the right to buy it from me for the same price I paid for it. Then I would collect whatever that premium was. What the hell is that premium? NEM, 428, 43. So if I want to do it today, it would tomorrow morning it would be 74 cents, and that would expire next week. So the strategy is simple. You want to get into complicated stuff, fine, ding, but not here. Not here. Anywhere between 7,000 and 20,000 people come across this every night. I've been doing this since January, and it's always the same thing over and over and over again. Safe, simple, right? Simple, safe, predictable, consistent, no way to lose. Okay? That's what this is. You want to talk about something more complicated? Fine, we'll do that somewhere else, but not here. There's a lot of people coming here that don't know what to do, don't know what we're looking at, and they want to be reassured that it is something that they can do. You want to talk about accrued interest. You want to talk about Black-Scholes pricing methodology for coming up with the valuations for the options, how they decrease on each day, and how they're affected by the increase of the stock prices based on the delta or the vega. Yeah, we can have that conversation, but not here. Here, it's simple, safe, predictable, and consistent, okay, and no way to lose. If you're only buying companies that have increased their dividends every single year for 20 years or more, those are the only ones I actually show on this platform, on this trading strategy. Okay, I have 6 different accounts. I share 2 of them publicly. The other 4 is none of your damn business. Okay, if you want to, you have to join the group, and then you will be invited once you prove your worth. Okay, so this, simple, easy. And if you're not okay with 50% per year, I really can't help you out. Seriously. But yeah, I have heard of accrued interest. Oh, I missed all these questions. No, shares, yes, no. What about REIT? Some of them I like, some of them I don't. Is GXAI good buy? I never heard of them. Do you buy right before the EX date and then sell after the date of record? No, I buy 10 days before the EX date. The stocks that I look at, I should rephrase, the stocks that I look at have a tendency to go up before the EX date. All right. We just dropped below 60. I'm going to reboot, and then we're going to go back to try this again. Mark, blah, blah, blah. Do you realize your screen's backwards? No, I did not realize that. You're selling options. Yes, I am. The strategy is the torsion here. Yeah. No way to lose is deceptive and fraudulent. Maddie Babe, you're back again with more crap. All right, Maddie Babe, no way to lose. All right. Yeah, there is a way to lose. I'm sorry. I said there's no way to lose. Okay. Hypothetically speaking, Maddie boy, you ready? Companies that are over 100 years old, could they go bankrupt? Yes, they could. How often have you heard of a 100-year-old company that consistently increased their dividends every single year for 25 years or more? How often have you heard of one of those going bankrupt? Seriously, how often? Okay? Now, Coca-Cola, I can pretty much guarantee Coca-Cola is going to be making Coca-Cola another 5 to 10 years. I'm pretty sure Ford is going to make Ford for another 5 to 10 years, 20 years maybe. They've been doing it for over 100 years. So when I say no way to lose, you're buying a good, decent company. If you buy a crappy company and you lose, that's your own damn fault. Okay, when I taught my daughter, it was simple. These companies only. Okay? This was what I told my daughter. Simple, safe, predictable, consistent, and no way for her to lose. I'll throw that word in there just in case you guys don't understand. So, if you buy a good quality company, right, and you never sell it at a loss, how can you lose? The only way you can lose is the company can go bankrupt. Can it happen? Yeah. The world could happen. The world could end. That could happen. Okay, and an earthquake could open up and swallow every single Coca-Cola manufacturing plant on the earth. It could. I seriously doubt it. But yeah, it is kind of deceptive. Fraudulent, I wouldn't say quite fraudulent. Okay, but the only way for you to lose is if you sell for less than what you paid for it. If you do something that is contradicting to what I'm saying, yeah, you could lose. Buy a good company, never sell it at a loss. How can you lose? The company could go bankrupt. You're absolutely right. The world could end, but then what the hell does that got to do for you? Okay, Coca-Cola, I don't see it. Ford, I don't see it. Okay, General Motors, don't see it. General Electric, don't see it. Consolidated Edison, they've been in business for over 200 years. Johnson & Johnson, over 100 years. Procter & Gamble, over 100 years. Home Depot, over 100 years. Procter & Gamble, over 100 years. Lowe's, over 100 years. I can go on and on and on. These are the only companies I look at. So if you're buying something and you lose money, then you've done something wrong. We're not talking about the Greeks. I'm just saying that's not how dividends work. All right, risky trees. The way a dividend works is if you go back and look at your history. In 1602, the very first dividend stock was sold. That was the British East India Shipping Company. The way they did it, they went door to door selling shares. And their pitch to the people of the public. This is the first time the public was able to buy a company share. Okay, and how did they do it? Knocked on the door and said, hey, I got an opportunity for you. Loan us some money, we'll give you a share of the profits. A dividend is the share of the profits. That's what it is. Okay, you got two different kinds of companies, some that share the profits and some that don't. Dividends are the investor's share of the profits. That's the way dividends work. Okay, 1602 was the very first dividend stock. And the pitch was, we will share the profits with you on this new business venture. I don't know the exact terminology. They were speaking Dutch, and there's no actual record of what the sales pitch was. But that's pretty much what it is. Because before that time, the average person wasn't allowed, or wasn't able, or wasn't capable of buying into big companies. Okay, so Dutch businessmen came up with a cool idea. Why don't we just go around door to door asking people if they want to buy shares of the company? We'll give them a portion of the profits. That company averaged 18% per year for 198 years. Pretty freaking good, but it is what it is. So dividends are a portion of the profits that go to the shareholders. Man, I'm worried about you and the people who follow your strategy. All right, lovely. Okay. Plan on buying WBA tomorrow, or should I sell calls or buy calls? All right, DK, I really can't tell you what to do. Seriously, I can't. I'm just here showing what I do. Okay, we're at 50, we're at 49. All right, we're gonna reboot. Don't go anywhere. I'll be here. we're gonna try this again. I don't know how many people are on Facebook. I just don't know. Yeah, I gotta fix those cameras. All right, we're gonna try this again one more time. Okay, we drop below 50 again. It's just not worth my while to do this one. Not that I'm insulting any of you guys here, okay? But dancing to an audience, but not a whole heck of a lot of people there. All right, Rogers here. Karamat, Cool Beans. J.L. Haba, I love you's here. Randy? Is that Randy or Rainy? Okay. Lee Fioka. Karamat, Rainy. Invite. Blade's back. Hey, Blade. All right, so let's see if we can continue without too much. Look, we're up 65 already. I don't know where the people. I don't know how that works. You start like 200 and it drops down to 50. What's with that? Tap on the like keys. Thanks, 86. Are the PPI and CPI next week going to change the market? No, I honestly cannot tell you about that, really. But the CPI and the PPI really don't have much to do with the dividends and the consistency in which they pay their dividends. Michael David Robinson, you just did my second setup, 3700 contact level. All right, I can't read that fast. Sorry, dude. Okay, over on YouTube, when you throw up a question, all right, or a statement or something like that, it flashes on the screen, and then I have to run all over here trying to read it, and it just doesn't always work out that way. All right, hello from Fight for Freedom. Hey, how you doing today? Okay, so 200 people, that's much better. I like a bigger audience. 50 people is not a lot. Okay, so as we were saying, 37 contracts. Cool, Mike. Way to go. Let me know how it works out for you. We'll sell calls on WBA. Basically, that's what I do. I buy the stock. I sell the calls. And you have to make sure you get the terminology correct. Because if you get the terminology wrong, you could lose money. All right. That's a big name. The real nemesis, Sergio. Okay, I can't read that all. But, glad to see that you're here. Welcome to the show. All right, so NEM, I like it. Okay, but I'm a little bit unsure here because how much further can it go up? The 30-day high's here, and we're here. All right, if I had bought it on Monday, because you bought it 2 days up, there you go. Did you jump in on Monday? Boom. Now that was, all right, DK, not a problem. Terry, how are you? About to leave after dinner. Gotta do Walmart, but I'm telling you, need to invest in this food place. Okay. Minute Mill. What's some long-term dividend stock? Okay, I don't do long-terms at all. The longest I ever held anything was 9 months. Okay, some comments are filtered. Yep. Joey Gladstone. I have no idea who Joey Gladstone is. All right, so let's go to the next one on my list. That will be IBM. All right. Now, just in case you guys didn't know, these stocks right here, all these little labels here, this is what you guys have me look at every night. Okay, I write them down, we take a look at them, give you my opinion, and we go from there. But my trading strategy is pretty simple, and I do not deviate from the strategy. It's simple. It has to be simple, safe, predictable, consistent, and no way to lose if you follow all the rules. The rules are simple. 5 rules. Never buy something you do not want to hold long term, because you just might have to. Never sell at a loss. It kind of defeats the purpose. 20 years or more of increased dividends, because if and when the stock goes down, because that's all they do, they go up, they go down. When the stock goes down, I want to be reassured that I get higher and higher dividends every year. Okay? And last, weekly options, because I want to get a weekly cash flow. Weekly options gives me a weekly cash flow. I can collect 52 checks per year. Last but not least, the numbers got to work. What does that mean? That means, what am I buying it for? Okay, you have the last price, the bid, which is what I can sell it for if I was going to sell it. The ask, what I can buy it for if I want to buy it. Okay, then you have the volume, how many shares were traded for the day, the open, the opening price of the day, the high of the day, and the low of the day. All these numbers right here, you can pick up at any trading platform, anyone. I just happen to use Thinkorswim, which is owned by Charles Schwab. Okay, you can go to Charles Schwab, open up a free account, download this onto your computer. It's one of the best trading platforms I have seen. Now, I've been using it for close to 20 years. I love it. But that's me. But you guys make up your own decision. I don't get paid for any of that. I get no compensation whatsoever from anyone, anywhere, anyhow. Okay, I don't believe in that kind of stuff, which is probably why I don't have as much money as I probably should. Anyway, besides the point. IBM is the next one we're taking a look at. IBM. We all know who IBM is. IBM. First thing I want to look at with IBM is what can I buy it for tomorrow morning? 166.50. The closest one we have is the 165 or the 167s. I like the 167s. Look, it's going to give you 120, but that's not 1%. Okay, so ask yourself the question. Do I want to buy IBM? Do I want to, let's take a look at the chart. But it's not offering 1%. I personally would say no, because it's not offering me 1%. But let's look at the chart. Right? Here's the high. This is the 1-year chart. This is the high. Here's the low. Here's where it was a year ago. And here's where it is now. There's a little gap down. We got a gap up over here, and then we have a gap down. Okay, well, let's take a closer look at it. All right, a year ago, we're at 122. That was the low of the year. The high of the year, 199.01. Okay, the last 90 days. Okay, this is the last 90 days, the last 3 months. Okay, the last 3 months. Here's the high. Here's the low. Here's where it was 90 days ago, and here's where it is now. Okay, I'm not getting my 1%, so why am I continuing looking at it? Well, because it's IBM. We all know who IBM is. Okay, for the last 30 days. Exact same thing. Where's the high? Where's the low? Where was it 30 days ago, and where is it now? Okay, so here's my 30-day high. She slides on over, then drops like a rock, keeps on going down, finds its 30-day bottom right there, and it's bouncing off of that. 4 days to the upside, and today was a bit of a pullback. I'd wait to see what tomorrow looked like before I decided to jump in on it. Selma Lillian Kale. Hi, it's Lillian, the trader from Las Vegas. How are you? I am wonderful. Thank you for asking. Very courteous of you to ask that. Okay, so that's IBM. What's IBM normally do this time of year? Well, for that, we need what's called the seasonality chart. The seasonality, okay, the seasonality basically shows us what the stock normally does for the year. Okay, the blue line represents this year's movement. XRP, top view. I don't do cryptocurrency, sorry. Chronos. Is that a Marvel character? No. The blue line represents the movement for this year. The red line represents 10 years worth of data. 1 year on top of another, and that is the average over the last 10 years. So what does this IBM normally do? It doesn't do anything. It just basically goes sideways all year round, and in the fourth quarter she dips. She dips and then recovers. Basically it doesn't do anything. Okay. No, please. I have no idea what you mean by no, please. A Torp. 90. What is going on over here? Okay. So, that being said, let's go on to something else, because IBM is not giving us 1%. All right, next on the list, MPO. All right, hold on. NQ, please. NQ, I never heard of NQ. NQ Futures? Can we check XRP? All right. NQ, what the heck is NQ? NQ. NQ Mobile Inc. Yeah, has no options. Sorry, I checked it. No. XRP, XRP.
Okay. XRP, can't find the symbol. That means it ain't happening in the stock market. Yeah, that's probably one of cryptocurrency. SCHD, I can tell you that's a no right off the top of my head. SCHD. Okay, now didn't we take a look at this a little while ago? SCHD. Now let me tell you why I don't like SCHD. Nikola is not 20 years old, and that's not the ticker symbol. Okay, so SCHD is an ETF, number one. Number two, it has monthly options. What does that mean? Monthly options means I can only get 12 checks a year. Why would I want to get 12 checks a year when I can do a weekly option and get 52 checks a year? It's just a math thing. 52 weeks a year or 12 months a year. Okay? Is it good for long term SCHD? I have no idea. AFL, AFLAC. Ooh, that's a good one. I'm going to write that one down. We'll take a look at AFLAC. AFL. Okay, so another reason why I don't like ETFs. Okay. Here's Yahoo Finance. Now, for those of you guys who don't know, this screen right here is live on YouTube. So it might be a little bit bright. You might not be able to see the numbers or anything. But what I'm looking at right here is the 52-week range, 78 to 79. All right, big deal. But look at the yield. Okay, SCHD is giving a 3.4% yield. I'm showing you how to get a safe, predictable, consistent 1% per week. And you want to put your money in something that pays 3.4% for the year? GDC. All right, GDC. Let's get out of this one. Okay. Are you serious? GDC really has no options, number one. Number two, it ain't going to have any options, especially when it's below $1. Okay, I have no idea what you're thinking. That's going to come, Bruno, that's going to fall under the category of WTF you thinking. What were you thinking? Paramount, again for next week. Hope you're feeling okay. I feel fine. So, been busy with trades lately. Got more individual students, and now I'm trading for since last month. Well, that's awesome. Good for you. Where was I? Okay, so that's a no. Next on the list, ooh, Eli Lilly. Sounds like SCHD is better. All right, Mike, didn't we just talk about SCHD? SCHD is offering 3.4% for the year. So you're putting your money into an ETF, electronically traded fund. Okay, fine, Danny. If you don't want to take personal responsibility for your money, that's up to you. Okay, but SCHD is offering 3.4%. I'm showing you a trading strategy. It's simple, it's safe, it's predictable, it's consistent, and it makes about 1% per week. So 1% per week, 52 weeks in a year, that's over 50% a year. So why would you want to put an SCHD that pays 3% or 3.4%? How do you feel about real estate REITs? Some of them are okay. So are you holding short through dividend dates? Not all the time, sometimes yes. Okay? Sometimes yes. Okay, I buy a stock 2 weeks before the dividend date. Why? Stocks have a tendency to move up. Just having issues with Facebook. Alright. Whatever. So much at Facebook. Alright, Facebook's being difficult. Just started watching, don't know what this guy's talking about. Mike Wald. Sound to the moon. The SO, yeah, I don't do sound. Okay, so basically what I'm talking about, you just showed up, Mr. Mike. Dividend investing for weekly cash flow. Safe, predictable, consistent 1% per week. Using dividend stocks that have increased for more than 20 years. Okay? Then do a cover called against them. Thanks, 86%. 7 straight. So that one's a no. Eli Lilly, LLY. Okay, so somebody want to take a look at Eli Lilly, all right? But I'm going to say no. How old am I? I'm 60. I'm retired. Okay, so that being said, Eli Lilly. Somebody wanted to look at this last night. I don't do stocks over $250. Eli Lilly is $770. So as much money as you think I have, I cannot afford to do 1,000 shares at $770 a piece. Trev, been dividend investing for a year and a half. Really started snowball. Cool. I hope another 100. Bruno, I have no idea what that means. Need WBA to go up 2 weeks before EX date so I can lose that bag. I have no idea what that means. You guys, you put stuff on here, it makes sense to you, but I don't understand. Brandywine Realty Trust. Landscape executive, how are you doing? Because you said you were 60. Oh, yeah, 100. Yeah, I don't know if I want to do 160. Because every year, it's the new ache and the new pain. It wasn't there last year. Okay, landscape. If you want me to take a look at Brandywine, all right, you got to give me the ticker symbol. I can probably tell you right now, no, because it doesn't sound like they've been increasing their dividends for 20 consecutive years. Okay, 20 years or more of increased dividends. All right, let's go to the next one. Eli Lilly, I can't do it. Thoughts on Plug? We looked at Plug yesterday. LUG. Okay, Plug is at $2.77. Okay, do you really think Plug is going to have 20 years or more of increased dividends? Scrap the caddy. Oh, come on. You want to hear something cool, Mr. Scrap the Caddy? My son's very first car, okay, his very first car was a 1967 Cadillac Coupe de Ville convertible. Okay, we went all the way up to, we flew from Sarasota up to Boston. Okay, it was in a barn in Boston. We spent a week up there slapping it together. We drove it from Boston all the way down to Sarasota. We broke down in every state. One hell of a story, though. Ribbon's a no. They don't have 20 years of increased dividends. Sorry. 60. What occupation did you retire from? Sure, it couldn't include any type of trade. Nope, didn't. I had a manufacturing company. BDN. All right, we'll look at BDN. Write that one down. BDN. Now, for whoever just said that, let me go back and find out what exactly it was. All right, AB. 60, question mark, exclamation point. Not quite sure what that means. But, yeah, I am 60 years old, okay? Just recently retired. I've done almost every job you can possibly imagine. I had a manufacturing company for, 13 years. Sold it, spent all the money, traveled the world. It was fun. Now, occupation to retire from surely didn't include any type of trading, investing. You're absolutely right. This was a hobby. Okay, the manufacturing company that I did was, I made exhibits for museums and aquariums, and I made so much money I had to figure out how to do it. So I did what any normal person would do. I bought all kinds of investments. I bought antique cars. I bought rental houses. I bought stamps, coins, art, stocks. Out of all that crap I tried, this is the only thing that was consistent. This is the only thing that was simple. Okay, I didn't have to find a place to house it. And no overhead, no boss, no employees, no inventory. All I needed was internet access. That was it. And if I can make a safe, predictable, consistent 1% per week, that's over 50% per year. And I do this for less than 10 to 15 minutes a day. Less than 10 to 15, could I do it more? Yeah, I probably could, but no. I prefer to watch the grass grow than sit in front of a computer. Okay? That's just me. But AB, I'm not quite sure how to take that. 60 question mark exclamation point. Not quite sure how to take that. BDN, we'll take a look at that one. Squirrel, yeah, thanks, 86. What was the name of your manufacturing company? Reef Replicas. ABBV? Cool. AB. He must be so rich I can tell from all the holes Oh, the holes in the wall behind me. Well, I just came down. I just flew down from Boston. Okay, and my son had this set up, had the TV set up, and it was way up. So those holes in the wall is where I took the wall mount off and I lowered it down. I haven't filled the holes yet. I'm still getting this room set up. So if you're new here, okay, now I've been doing this since January. Okay, doing the live since January every night. I missed 2 nights since the beginning of January. But I usually have 86 got room. Oh, that's funny. But I usually sitting on my couch with a big screen behind me was simple and easy. But down here at my son's house, I had to lower the TV. Anyway, and I'm still getting the room set up. It is what it is. Simone is here. Woohoo! Bye bye. All right, 86. And I don't know what it is with people. It's free information, and it's like, if it doesn't make sense, you don't have to be here. You don't have to be a hater. What's that all about? Anyway, it always amazes me why people do that. My mother always said, if you don't have something nice to say, don't say anything at all. I mean, is it really that difficult? Change the channel. Don't work for you? Just change it for the channel. People get hung up on the darndest things. Yes, they do. This is better than the university. Oh, I hope so. Hey, why not? You're back again. Okay, I do recognize the names. Now, 86, he's been here for a while. He's one of the moderators. So anybody being mean and nasty, 86 is going to boot your butt. Free and true, not biased. That's true. I have no hidden agenda. I'm just sitting there. I'm just sharing information. Okay. If it makes sense, then you should question who's trying to sell you crap. Okay, SCHD. Okay, great. They're trying to sell you the ETF. Wonderful, great. There's all this option. Yeah, wonderful. It's paying 3%. Okay, hold on. I'm missing some of these. Liam, you can summarize a strategy for those that just joined. I will. Give me a second. I'm missing them. We're going to day trade tomorrow. Any recommendations on stocks to watch? Chase, I honestly cannot tell you. Okay? And there's a few reasons. What I can tell you, but I'm not going to. Let me explain. Number one, if I tell you something goes wrong, you can sue me, and I don't want to open up that can of worms. Number two is I have no idea who you are, what you want to do, what's your threshold, what's your risk threshold. I don't know absolutely anything, nothing at all. What I tell people when they hear is keep coming back, keep asking questions, keep learning. Ask yourself, does it make sense? Okay, to buy a company, I have no idea who Plug is. Really, I don't. Okay, I would invest in it. Look, it's $2.77. They can't possibly increase a dividend for 20 consecutive years at $2.77. It would never come across my computer. It wouldn't. It's just not worth it to me. I only do companies that have 20 years or more of increased dividends. And let me show you that. Let me show you some of them. Okay, Kinder Morgan. I don't know if you ever heard of Kinder Morgan, but Citibank, Citigroup, X. Hold on. Don't tell me. Hold on. U.S. Steel, Capital One Finance, Apple, Wells Fargo, Pfizer, LVS. Hold on. Southwest Airlines, Intel, Delta Airlines, ExxonMobil, Eli Lilly, Microsoft, British Petroleum, Chevron, Starbucks, Goldman Sachs, Baxter, eBay, GLW. Oh, come on, GLW. Oh, I don't know that one. Damn it. Corning. Corning. Damn it, I almost got them all. But anyway, this is for the month of May 2024. This is just one list. I have like 10 lists. Okay, each one's categorized differently. But I think there may be one or two companies that you may not have heard of. What was that one? Kinder Morgan. Okay, Kinder Morgan's been in business for almost 100 years. They're a dividend king. They've increased their dividends 50 consecutive years or more. That's 5 decades. Okay, a lot of people don't know who Kinder Morgan is. It's not like Eli Lilly, Microsoft, British Petroleum, Chevron. You've heard of all of those. These are the only companies that I personally do. These are on my list. This here, okay, this is what you guys have me look at. All right, and I seriously think I want to do a video once or twice a week. It's gonna be called WTF. What the fuck are you thinking? Some of the crap you guys put your money in boggles my mind. Because I'm a numbers person. 1 + 1 is going to equal 2 no matter what galaxy you're from. If you're taking your hard-earned money, now, the way we grew up, the way I grew up, go to school, get a job, work 30, 40 hours, work 40, 50 years of your life, and then retire comfortably. That's what was drilled in our head. If I'm working 40 years of my life, putting a little bit of nest egg aside, and I'm handing it to some bozo who's going to give me 3% a year, oh, hell no. If I could get 1% a week, safe, predictable, consistent, 1% a week, that's 50% a year. Why the hell would I entrust my money to anyone else? Seriously, ask yourself a question. If you could get safely, okay, 1%, even a 0.5%, okay, a 0.5% a week, you're buying a good company. British Petroleum, Chevron, Starbucks, Wells Fargo, Pfizer. That's just one list. And that's just 1 month. We can go to the next month. What's the next month? Back one. Here we go. Comcast, Cisco, JD. Oh, damn it. JP Morgan, General Electric, Caterpillar. Wow, nothing in there. Verizon, Kinder Morgan again. Okay, I have over close to 175 companies I look at. Almost every single one you probably heard of. Okay, so again, Chase, I can't tell you what to do. Okay, all I can say is, does it make sense to you? Okay, never buy something you don't understand and you do not want to hold long term, because you just might have to. All right, I'm getting rid of this phone. Okay, let that one charge. And I'm going to pick up another one. And we'll do Facebook again, because I'm sure the people on Facebook want to know. So yeah, seriously, I can't tell you what to do, okay? All I can say is, come back every night. I've been here since the beginning of January. And there's some people here in the audience that have actually been coming since January, every night. All right, let's go to the next question. Facts. I'm falling behind on projects around the house. I'm sorry to hear that. Yep, landscape equal 86. Yep, 86 did. Oops, I missed some. Sorry, guys, I keep missing questions. I keep popping them out. CBS worked out. Look at it again. Okay, Terry, I'll take a look at it again. Hold on. Where the heck was I? Why not? He's here. Okay. All right. Yep. Look. How many years have you been running this strategy? And you're a good man for getting negative comments. Alexis, hold on 1 second. Let me get Facebook up and running. You know, it would be a heck of a lot easier if I could figure out how to use the software. I have software on my computer that allows me to broadcast to every place. But can I figure it out? No. So what do? I go on my cell phones and just hit apply. It's so much easier. All right. All right, here we go. Another phone. Yeah, I'm old school. If it ain't broke, don't fix it. New software, yeah, I'm not very good at it. So it's easier for me to just go out buy another phone and just sit there on my settings and just press play. Okay, so what were we talking about? All right, how many years have I been doing this? I've been doing this for quite a while. I'm going to show you something. Okay, now you're new here because you haven't seen this. I just showed it a little while ago.
Hi, I'm JC, and being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists.
One company per month. Just one. January, February, March. Okay, so this video is from 12 years ago. This trading strategy was created for my 9-year-old daughter when she was 9. The video you saw her, she was 11 at that point. Okay. Why don't I have a picture? Why don't I have a video when she was 9? Well, because we didn't know how to broadcast or how to upload back then. This is when I first started to learn how to share the videos and share the information on YouTube 12 years ago. Okay, fine. So I've been doing this exact thing. I'm standing in front of a whiteboard which has a calendar on it, written in marker. Okay, how many stocks in January? How many stocks in February? Blah, blah, blah. Okay, we did it back then. You hear me saying the exact same thing. That's 12. 12. You can buy 12 different companies for the whole year and still make over 20% a year. That is easy. One trade a month. Who can't do one trade a month? But if you want to bump it up a little bit, let's do 2 trades a month. 20 days. 20 days in the month of January, you can do 2. 1 every 10 days. Okay, so you get 2 January, 2 February, 2 March, blah, 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 24 for the whole year. And if you get at least 2%, that's close to 50% a year. 50% per year. Okay, I say the exact same thing now as I did back then. Okay, so how am I doing this? Oh, that video is 12 years old. Let me go back to where we are. The way we were. That's the way I were. Okay, so that answers that question. I've been doing it for quite a while, and yeah, it does. All right, did you invest in a mentor anytime in your life? Oh, a bunch of those. All right, week 2 for me, 1% each week. Hey, all right, good for you. 86, unpinned comment, nice. Good one. Watch level 2 and trade the cues, all right? How do I find stocks paying 1% weekly? Dragarin. All right, Dragarin. You're new here, okay? That name I would remember. I'm good with names, okay? I can see a name and see whether or not it's the first time you're here or if you're a repeat offender. And you like that repeat offender. Now, Terry Smith Sr., I think you're new. Terry, not Terry, Terry. CVS worked out. Look at it again. Hey, CVS will put it on the list. Is CVS on the list? Nope. But it is now. CVS is on the list. We'll take a look at it. All right, what else we got here? Dividends don't seem worth unless you have like $1 million to invest. Prove me wrong. Cool. Jack. Zazuka. Zazuka, is that right? All right. Jack, this is for you. You ready? Pay attention, Jack. This is for you. We're going to go back here. We're going to go here. Okay, this is the 10-minute trader. This is my website. Okay? Now, website, 10-minute trader. Investing in dividend stocks for up to 50% annual return. Simple, safe, consistent, and predictable. If you're looking to strike it rich overnight, this ain't it. My main focus is safe, consistent, and predictable 1% per week. Now, 1% per week, Jack, my friend, is 50% or more per year. Now, better than that, let's slide all the way down. Now, all the way down, the bottom of the page. You ready for this, Mr. Jack? Week number 1, the first quarter. That is this year. This is every single trade I have done so far this year. You notice there's 2 columns. Column 1 and column 2. Column on this side here is an all-cash account. What does that mean? It's all cash. The account over here is a margin account, which means cash margin, borrowed money. I do not suggest anyone do margin until you understand it. Okay? So account right over here has $117,000 at the beginning of the year. This account here has $200,000. 100,000 cash, 100,000 borrowed money. I do this every single year so that you can see actual trades. Okay, I have this set up from back 10 or 15 years ago, tucked away somewhere. So let's take a quick gander. Week number 1, 2.12%. Week number 2, 1.3% in account number 1. Account number 2, 2.38%. 2.5%. That's week number 1. Week number 1, account 1, account 2. Week number 2, account 1, account 2. Okay, you go all the way up. You can check the numbers yourself. Let's go to the tally. Where is it? Right here. Okay, week number 1, account number 1. Started out with $117,475. I'm up so far
this year, from the beginning of January, 27.26% so far. That's not counting this week. Okay, I have withdrawn, cash withdrawal, because I live off of the interests, 15,000. I've taken 15,000 out already, and it's still over 117,000. Account number 2, 100,000 cash, 100,000 borrowed money. Borrowed money. Margin money is borrowed. I have to pay interest on that money. I am borrowing money from my broker. He gives me a certain amount, I pay an interest on that. This account at this moment in time is 56.85% so far this year. Okay, so I'm not 100% sure what you mean by it's not worth it. This account right here at 50% per year is over $50,000. This account here at 50% per year is over $100,000. That's not millions, that's hundreds of thousands. 100,000 here, 117 here. Okay? So let's go back to where we were. Hopefully that answers your question. We're at 10:30. 10:30, we're at 64 people. Holy cow, where did all these people go? Jack, hope that answered your question, in your opinion. All right, this man is very smart and heart attack free. Wait, relax, free in Asia, or what you call it. Okay, why not? I have no idea what that means, but I don't know if it's a compliment or not, but thanks. Is your complete process in your book? I just finished book number 14. It will be available in my bio eventually, or up on my website eventually. I'm hoping sometime this week. I just signed up with a marketing company. They're supposed to help me get this mess. Because I don't know if you've noticed, I'm not very professional at this. You know, I'm really not a professional. I'm a regular, ordinary guy. Do you have a tutorial set up for Thinkorswim? Yes, I do. That's in the videos. Tinder is in German, I think. Okay, but it's available on here. That last blitz. Then they call stock scams and manipulation. Yeah, they do. They are manipulating. But the thing is to know how to play the game. Once you know how to play the game, JEPI, J-E-P-I, that is another ETF. I'm going to tell you the same thing I tell everyone else about ETFs. If you're relying on somebody else to take care of your money for you, I don't know what to tell you. Why not? He's still holding MDGL. Really? Right, but we'll take a quick look at it. MDGL. I never heard of it. Would it be okay if I use your name specifically? My WTF, what are you thinking? The video? What were you thinking? MDGL. Never heard of it. MDGL. And Mac, you want to look at JEPI, huh? JEPI. I can tell you no right now, or we could go through the exercise for the fun of it. JEPQ. Really? You want to get that one too? JEPQ. All right. Somebody just mentioned something about the screen being backwards. Cabs. No, screen's not backwards. Left to right. That's correct. Okay. January 1st. What do you call that? A year ago? Today? Yeah, that's right. That's correct. What are you looking at for next week? Ooh, nice question. Looks like you're a little backed up on comments. Yes, it does. All right. Can you give us a walkthrough on one stock and how you got 1%? Yeah, Raccoon, why not? We'll do that in a second. MDGL is long term. Yeah. I don't do anything long term. It's backwards to us. Yes, I'm well aware of that. 4K likes this guy for this information. Well, actually, it's higher than that. This is I had to reboot 4 times because something was going wrong. All right. Gabriella. I didn't catch the name of the book that has this process. Can you repeat the name, please? Why not? My thumb is going to fall off. All right. Gabriella. I've written 14 books so far. Okay, they're all available on, where is it? Is that one right
right there. Okay, that was one of them. Whoops. Right here. Yep. Amazon. They're all right there. Now, these are the older versions. Okay, these were written 12, 15 years ago, 2012. Yeah, written quite a while ago. Now, I have updated version which is going to be updated. It's going to be updated this week on my website and on TikTok. Okay, so I'm working with a marketer that's going to help me out with that kind of stuff. This is not my thing. Oh, you guys want to look at an actual process of how to do it? All right, fine. Let's look at one. KD. Let's take a look at KD. All right, KD is going to be a no. Okay, monthly. I don't do monthlies. The numbers just don't pay. We all know it's backwards from TikTok. Watch it on YouTube if you can't understand it's TikTok. Yeah. Thanks, Michael. Yeah, this is broadcast on YouTube. So you can actually, because you can't, however good you think your eyesight is, you can't see these numbers. Okay? All right? If you're on a phone, if you're on an iPad, how are you going to see these numbers? Okay? That's why this screen here is live broadcast on YouTube. Okay, there are people out in the audience, they have told me this, I think it's funny as hell. They sit on their they sit on their couch or their comfy chair and they watch on their big screen TV with their phone right next to them. Okay, so they can watch on the big screen and listening at the same time. There's big things to come in the market very soon. Dot, you're 100% correct, there is. But what I can pretty much guarantee, Ms. Dot, is Ford is still going to be around. General Motors is still going to be around. Consolidated Edison, General Electric, IBM, U.S. Steel, Bank of America, Wells Fargo, Procter & Gamble, Eli Lilly, all the companies that are over 100 years old, more than likely, they're still going to be here, no matter what crap the current administration or the next administration throws at us. Okay, we'll still be here. These companies will still be going, because, me, you, your brothers, your aunts, your uncles, your cousins, the guy down the street, the guy, 3 neighborhoods away, we all go to work every single day. We get up, we do our morning ritual, we jump in the car, we go to work. That's what we do. Okay? No matter what's happening in the economy, we go to work. That's what we do. All right, so you wanted to see something that works, and you want me to walk you through it. Procter, yeah, it's a funny thing. Procter & Gamble. Next on the list, right in. Procter & Gamble, 166, 166, 165. Ooh. No, damn it, not 1%. Okay? You get like a 0.5% with Procter & Gamble. There is a big thing coming up. I saw that one. James, look at one-day option on GME when you get a chance. Why, Wade? Why? GME does not pay 20 years of dividends. 1846 to 1850. Holy cow. All right, so Wade, here's the question. Yeah, nice option, nice premium. However, what happens when the stock goes down? Because what do stocks do? Look at it. A year ago, we're at 21. Okay? A couple of weeks later, we're at 28. Okay? A couple of months later, we're down to 11. Okay? Stocks go up, then they come down. Then they go up, then they come down. Then they go up, and then they come down. Now it's come to the upside. It's at 1801. I don't know. Yeah. Yes, I understand. Okay, so we'll entertain you. That's nuts. That's nuts. It really is. Okay, now, I'm not suggesting this to anyone, but, okay, Wade's been coming in for a very long time. Okay, so Wade, I take some of his requests a little bit more seriously than others. Okay, but here we go. 1846. I could buy first thing tomorrow morning at 1846. All right, I can sell somebody the right to buy it from me at 1850. which is more than what I paid for it. And I can collect 90 cents a share. Okay? 90 cents a share. All right, so let's see exactly what that comes out to. Okay? 90 cents divided by the purchase price, $18.46. That comes to a grand total of 4.8%. Okay, fine. If you like GameStop. That's the big one. If you like GameStop. Okay, so I always say, never buy something unless you plan on holding it for a long time. Julie, you haven't said anything all night. How are you? Julie, this is GME, GameStop. Okay, I don't know if you ever heard of GameStop. But let's take a look at those are the numbers. The number is 4.8%. It's almost 5%. But we haven't even looked at the chart yet. Let's take a look at the chart, see what the chart tells us. Okay. Okay. High, low, where was it a year ago? Where is it now? All right. A year ago, $20.24. Okay, a couple of months later, we're at $27.76. Ended up the year right around $17.85. The last 90 days. Okay, last 90 days. The high was today. The low was a couple of weeks ago. 90 days ago, today. The last 30 days. Okay, 30 days ago, right here, right around 11. Okay, bottomed out right on the 16th, just below 10 bucks. Okay, and up, pulled back. It went up to about 12.10, pulled back, and then look, shot up and kept on going up. And it's a 30-day high today. What do you think is going to come tomorrow? Okay, tomorrow. I understand selling premiums a little bit, but I want to start with a small $50,000. Why not? Okay. Yeah, more than likely PGA. You know, more than likely it's good. But here's the thing. If you bought it tomorrow morning at the opening of the day, sold the 1850s, because it's at 1842. Okay? But you know, James respects you when you that's funny. Yeah, I wouldn't do it personally because they don't pay dividends consistently. I don't even know if they pay dividends at all. Okay? Market makers pushing the game. Isn't it really? Well, let's take a better look at that. Holy cow, he was right. How are the alcohol stocks looking? Astronomy, I have no idea whatsoever. All I know is there are stock symbols in my calendar. You should sell premiums and MSTR. I never heard of them. Money for nothing and your chicks for free. Money for nothing and your chicks for anything gone digital. GameStop is closing like Blockbuster. Cool. I enjoy this channel. All right, wait. Hell yeah. MicroStrategy. What trading platform is that? Looks amazing and sophisticated. All right, PGA Hork. Okay, I'm gonna let you know. This is Thinkorswim offered through Charles Schwab. It is extremely complicated when you first get there and you don't understand it. Okay, a lot of people just call me up and I walk you through how to set it up the way I use it. There's so much stuff on there, I have no clue how to use it. And I've been doing it for over 20 years. I have no clue how to use more than half of that stuff because it doesn't have anything to do with my trading strategy. MSTG. All right, Phantom Trades, MSTG. I'm not 100% sure why we're looking at MSTG. MSTG. It has no options, so it is a no. Sorry. Sophisticated despite the wall. All right, smarty pants. Only thing we got is U of M sentiment. So most likely theta killing it. Okay. MSTR. Oh, MSTR. Sorry. I said a MASTER, a G with a double E. I said I go by the oh hell no. $1,263. I'm not as rich as you think I am, dude. Okay, you can afford $1,200 stocks? Fine. What are you doing here? What's my strategy? My strategy is simple. Made a lot on Reddit. Well, good for you. This man is true for you. All right, good. Bye-bye. All right, MR. All right, so MSTR, yeah, I get it. But 1,287, I don't buy anything over $250. Hello, Sugar Hill Gang. Hey, members, yeah. All right, thanks. Do you trade options? Yes, I do. Okay. So, what strategy do you use? I use this. It's a simple strategy. It's kind of like a strategy I came up with together. It's like dividend capturing, covered calls combined. Dividend capturing covered calls combined on dividend stocks. Heard that too high for me, the average man. Yeah. Should I buy or sell? I couldn't answer that question for you. Redfin is no, and BA is, I don't know what BA is. Oh, we haven't done CBS yet. What is a covered call? Oh my goodness, a covered call is when you buy a stock, okay, you become part owner of the company. Okay, you collect dividends, which is cool. Well, someone just gave me something. Money for nothing. Thanks, dude. That was nice of you. Anyone told futures I would short right now? Okay. Any certain stock you excited for the next week with dividends? Never mind. F only 91. Okay. All right. So, yeah. MASTER, a G with a double E. I said I go by the unforgettable name, the man they call Master G. My name is known all over the world, from the foxy ladies to the pretty girls. LG. LG is next on the list. I know BA is Boeing. I know that. But why are we looking at Boeing? 181. 182. Yeah, that's going to be a no. All right, look at the premium. 41 cents. Yeah, no. Redfin up. Yeah. Redfin doesn't have 20 years of increased dividends. Circle key. All right, let's take a key. Laser gems. Aha. Okay, Reddit flourished during, 2020. Okay, I get that. PGA Hort. Okay, I get that. Reddit's big. I understand that. But they do not have 20 years of increased dividends. I read a story on them. They don't even project to be profitable. Why would I do something in a company that is not going to be profitable? Yeah, I get it. It just released. I understand all that. Pfizer, that's a good company. Didn't we look at Pfizer earlier today? I think we did. But I'll write it down again. PFE. I like Pfizer. Pfizer's a good one. 10 grand, baby, coming. Why not? He loves this channel. All right. Way to go. Nope. Nope. I have no idea what you're saying no to. Like I said, do T follow now. I have no idea what that means. Do T follow now. Eli Lilly. We looked at Eli Lilly earlier today. That was a no. All right. We're looking at LG. Oh, BA. BA was a no. LG was next. Okay. The reason why Boeing was a no, because the numbers just don't work. Okay? NVDY, that's another ETF, dude. I don't like ETFs. They're usually all monthlies. LG, no options. Okay, NVDY. NVDY. Okay, NVDY, this is another reason why I don't like ETFs. It is a monthly optionable stock. The numbers, okay, what I can buy it for, what I can sell a covered call against it, just don't work. They only 12 months in the year. That means I only collect 12 checks a year. All right, Terry, we're going to look at Tesla's in there. They don't pay dividends. BlackRock, yeah, no. Okay, guys, seriously, start giving me companies that have increased dividends, monthly options, no, weekly options, sorry. Increased dividends, weekly options. AA, is that Alcoa? O's a no. Home Depot's a no. OK's a no. Waffle, yeah. All right, which is my favorite? All right, I'm going to ignore you guys. Let's go what we're looking at. NVDY. All right. Why do I say no to NVDY? It's only 25 bucks. Okay, so 25.55. I could sell somebody the rights to buy it from me at 25, and then I would be losing money because if I'm buying it at 25.55 and I'm selling it at 25s, I can only get 45 cents. I'm losing money there. Okay, the 26s, 10 cents. No, that doesn't work either. Now, we got a week to go. Okay, fine. But look what happens for the next one. If I buy it at 25.55 and I sell next month's 25, I'm getting 5 cents. Now the numbers are just crap. Okay, the 26 is 75 cents. Okay, great. So I'm making 3%, okay, on the 26s. 3% on the 26s. But I got to hold it for 43 days. That is 7 weeks. 7 weeks, and I got to split 3% for 7 weeks. Yeah, they're not. I don't know what you guys don't understand, but the numbers just don't work with monthlies. It just don't work. All right, so let's get out of that one. Ford. Someone came up with Ford. I don't want to see tomorrow's. I want to see next week's. All right, 12.15. The 12.50s, no. 12.15, no. The numbers just don't work for Ford this week. Sorry. I said Coca-Cola. Yeah, Coca-Cola. The premiums suck. Always have. Apple. Ooh, no, that's a good one. Greeks are important. Why not either not? Okay, not for this trading strategy, they're not important. For this strategy. Other strategies, yeah, they are important. For this strategy, they're not important. How many stocks do you have to buy to sell a covered call? You need to have 100 shares. 100 shares equals one contract. Okay, Zim doesn't pay dividend. That's a no. RNDR, that's probably on the ETF. That's probably going to be a no also. RNDR. RNDR. No option. That's a no. Okay, so when I ask you guys very politely to make sure the companies have increased dividends, okay, increased dividends, and weekly options. Why? Well, because that way we can at least take a look at them to see if they're contenders or not. Okay, uh-oh, battery died. I'll be right back. I can get a battery. One second. All right, that was quick. I got a fan keeping the cameras cold. All right, what are we looking at next? PM. Philip Morris. Ooh, that's a good one. Can I think it's when we do research for these dividend companies you want to find. All right, user 1737. The best way to find the dividend stocks I'm talking about? Google. Okay, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. Right there, over 300 companies. Right there, that list. 10 years to 50 years of increased dividends. Those 4 lists. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. Google search. Philip Morris. We'll take a look at Philip Morris. Bubba saying good night. Okay. What about FANG? Never heard of FANG. AT&T, 17s. Nope, numbers just don't work. Sorry. FANG, F-A-N-G. Diamondback Energy, really? $200. Interesting. The 205, nope. All right, I could buy it at 205.38. The 205s are selling for $1.60. That's on 0.75%. Energy Transfer, don't like that one. ET, Energy Transfer, 16.23. Yeah, 2 reasons ET is a no. You ready? Reason number 1, 16.33. The 16s are going for 21 cents. That means you're losing money on that deal. Okay, the 1650 is going for 2 cents, losing money on that deal. Okay, worse than that, today was the high of the year. I never buy at the high of the year. Dominion Energy. Ooh, CL, Colgate Palmolive. Was that you, Julie, that threw that one in there? Colgate Palmolive. Ah, way to go, Julie. Colgate Palmolive, CL. Unfortunately, it's going to be a no. Okay, 2 reasons why Colgate's a no, Julie. You ready? Reason number 1, 94.31. The 94s are going for 60 cents. Okay, not 1%. And you're losing 31 cents once you sell it for less than you paid for it. Okay, number 1. Look at the chart. It's at the high of the year. Okay, I don't like buying highs of the year because it's kind of like standing on a ladder waiting for someone to bring you a taller ladder. Or standing on a ladder reaching for the sky. It just doesn't work. Dominion Energy, you gotta give me the ticker symbol. SRE. What the heck is SRE? SRE. Sempra? 76. It's a monthly, dude. Really? Monthly options. Okay, it means I can only collect a check once per month. That's 12 checks per year. The numbers just don't work for monthly options unless you're okay with, 12 to 24% per year. Then do your monthlies. I don't like them because they don't pay me enough. Which 3 do you prefer to invest in right now? Macy's, Nordstrom's, and Wells Fargo. I like those. Ooh, no, it's really good. XGF. I have no idea what that means. D. MPW. We did MPW earlier today. All right, Michael, you have a good night. CVS. We haven't done CVS yet. Let's do CVS. I've been telling this guy we'll be doing CVS for a while. It's not that I'm ignoring you. It's just that I just didn't get a chance to do it. Okay, CVS. 55.54. The 55s are going for $1.09. The 56s are going for 55. 55s take off 54 of that. Okay, right there. Right there. You wanted to see one that worked? Right there. 55.54. The 55s are going for $1.09. You take the 54 cents off there that you're losing right off the top, and it's still over 1%. Okay, great. Now let's look at the chart. See what the chart looks like. Okay, 1-year chart. Here's the high. Here's the low. Here's where it was a year ago, and here's where it is now. Okay, that looks acceptable. Let's go take a look at the 90-day chart. But let's go with the numbers first. Okay, a year ago, 69.99. The high of the year, 83.06. The low of the year, 53. The last 90 days. Okay, same thing. Last 90 days. Here's the high. Here's the low. Here's where it was a year ago, and here's where it is now. Alrighty. Okay, I like to know what the big drop was. Okay, there's a drop here, and there's another drop here. I would like to know what that is. But here's the thing. Okay, CVS has been in business for almost 100 years. Almost. Okay? Now, they've increased their dividends consistently. This is CVS in almost every major city in the United States. Almost just like Walgreens. almost the exact same. Walgreens, CVS, they compete for the drugs. You know, that's what people like anyway. But they are paying over 1%. I like that. So let's get this out of the way. All right. Now the last 30 days. All right, there we go. Okay, here's where comes the important part, because I want to be able to have a rough idea where do I think it's going to go in the next couple of days, or next Friday. Because today's Thursday, tomorrow's Friday, options expire tomorrow. Well, they actually expire on Saturday, but you can't do anything until tomorrow and after tomorrow afternoon. Okay, so the 30-day high was 30 days ago. The 30-day bottom was 6 days ago. So your 30-day high to your 30-day bottom, a couple of days to the upside. Now she's just going kind of sideways. Now stocks don't move sideways. They go up, they go down. We all know that. But basically, she's at 55.68 at this moment in time. The nice thing I like about this is, okay, you have a bottom of the year, bottom of the 90-day period, bottom of the 30-day period, okay? Once it finds its bottom, that's it for the year. It won't go below that, because if it would go below that, it would have. All right, so what does it normally do this time of year? All right, we all know the blue line represents this year, okay, movement for this year. Well, it's almost the same all the way up to here. Then it just drops some strange reason. There's got to be a good reason for that. But the red line represents 10 years worth of data, what the stock normally does. Okay, so normally this time of year, I want to see this area right here. Okay, for the next 2 or 3 weeks. Okay, here we got the 13th, the 20th. So it's kind of like a downward. I don't like how choppy it is. Okay, it's not a smooth transition. But if you pull back and look at the whole year, okay, here we are right here, this area. Just kind of like going sideways. No big movements whatsoever. Okay, Michael, you go to bed, see you in the morning. Early morning show. All right. So this is CVS. You ask yourself the question, and you always got to ask the same question over and over again. Okay? Do I like the company? Is this a company that I could buy and hold on to? That's not what I want to do. I want to buy it at 55.54. Sell somebody the rights to buy it from me at 55. Collect my $1.09 premium, which is over 1%. Okay? Now, as long as the stock stays above 55 by next Friday, where's 55? 55 is right here. Oh, let's go back. Got to go back. Okay. So here's where the stock is right now. Okay. 55.68. As long as the stock stays above 55 by next Friday, then I'll be back into cash the following Monday. That's ideal for me. I like to buy it, grab my 1%, be back into cash the following week. All right, so you guys wanted to see how you do on the trades. Here we go. Right here, where it says single, sorry, on the option chain, right there, you click on that, and these are all the different option trading strategies. Single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, collar, synthetic, butterfly, condor, iron condor, vertical roll, collar with stock, double, diagonal, unbalanced, deep and wide, and then it gets even more. Okay, because you can come down here, click on any one of these. There's one, there's another, and there's another. Check that one out. Fucking complicated as hell. Okay, I like things simple, safe, predictable, and consistent. That's all I teach here. I could teach you some of this stuff, but that's going to lose a lot of you. Seriously, it will, because that shit gets complicated fast. What I'm going to show you, I buy the stock, I sell somebody the rights to buy it from me for the same price I paid for it. I collect a small premium, I say thank you very much, and I go on my merry way. Very simple. I don't like to complicate things. All right, so I want to go to covered stock. All right, now I said I like it at 55. Okay, that's the closest strike price to 55. So I'm going to go right there, buy that, and then it fills automatically on this trading platform. I don't know what any other trading platforms. I've used this one and I use Robinhood. Okay, Robinhood's a little bit more complicated, but it's still the same thing. Okay, I decide how many shares I want. It preloads it for me at 1,000 shares. 1,000 shares, 10 contracts. Okay, one contract equals 100 shares. 10 contracts, 1,000 shares. All right. So let's say I want to do just 300 shares. So I change this. Okay, 300 shares, 3 contracts. All right. So I'm going to buy 300 shares of CVS, and I want to do it at the market. That's me. Okay. I want to do it at the market because it fills first thing in the morning. Okay, so if I send this off now, it will fill first thing in the morning. I will get that premium first thing in the morning. Okay, now I want to hit confirm and send. Then this pops up. Now I tell everybody when this pops up, actually read it out loud. So you're reading it and you're hearing it at the same time to make sure you understand what you're doing before you commit to it. Because as soon as you hit that send button, you are committed to that trade. Okay, up to this point, you can always change your mind. Okay, so here, I am buying 3 covered calls. Okay, I'm buying 300 shares, I'm selling 3 contracts. Okay, 3 covered calls of CVS 100s, those are the weeklies. 17 May 24, that is next Friday. The 55 call CVS at the market to open to open. What does that mean, to open to open? Well, I'm opening up a stock order, buying 300 shares to open, and I'm selling 3 contracts to open. Okay, options and stocks. Open a stock trade, open an option trade. Fair enough? All right, so my break even is 54.41. It's currently at 55.54. So as long as she stays above 54.41, I won't lose any money. Okay, that's break even, 54.44. Okay, right now it's at 55.54. Okay, great. My maximum profit for this particular trade, $177. So where's my calculator? Okay. Okay, my maximum profit, $177. Okay, $177 is my profit. It tells me right here, maximum profit, 177. Okay, cost of trade including commissions, 16,324. Divide that by 16,324. I'm getting 1.08% return for the week. So the question is, do I like CVS? Can I picture myself buying and holding it for the long term? I'm getting my 1%. Okay? Never buy something you don't want to hold long term. Never sell at a loss. Make sure it has 20 years or more increased dividends, weekly options, and make sure the numbers work. Okay, the numbers, we already checked out the numbers. They work. We looked at the charts. All the charts worked. Okay? So then you have to decide how many shares, how many contracts you want to do. That's it. That's how you do it. In this particular trade, 1.08%. Okay. Next on the list is ABEV. I've never heard of that one. ABEV. ABEV. Okay. ABEV is a no. It's a monthly, and I don't do monthlies. They just don't work. XGF. What is XGF?
XGF. New Germany Fund. XGF. Yeah, they can't find that symbol. They can't find the symbol. Sorry, dude. Julie, thanks. D. You want to take a look at D? All right, D. Dominion Energy. All right, now, why naughty? You've been here long enough. You should know I don't like doing monthlies. Dominion Energy is a no. It's a monthly. AGNC. What's the platform? Thinkorswim from Charles Schwab. AGNC? Really? AGNC. $9.64. My. All right. So I can buy it at $9.65. If I sell the $9.50, I get 21 cents. Okay? But I'm losing 15 cents right at the top. Okay? If I'm buying at $9.65 and I sell the $9.50s, okay, I'm getting 21 cents, which is over 1%. But once I subtract the 15 cents off of that, then I'm only getting 6 cents. And it's not 1% anymore. Sorry. WTF. He's market maker. He's not gambling. You get it? Okay. I'm not quite sure. Is that an option? Yes, it is an option. I'm joking. All right. CVS, no incoming earnings till 7-Eleven. Would that change your buying? Not at all. You see, Walter, I don't really pay attention to the earnings. Reason being, I've seen positive earnings when stocks drops. I've seen negative earnings when stocks go up. Earnings don't have the effect on stocks that you'd like to think that they would. You would like to think positive earnings stocks go up. It doesn't work that way. Never had a father, but dang, if I did, life is nice. Okay. Jerry, thank you all. Coney, C-O-N-Y, never heard of it. C-O-N-Y. C-O-N-Y. Yield Max Coin Option ETF. Come on, really? It's a monthly. I don't do monthlies. They just don't pay. Seriously, they don't. Make sure whatever you suggest has weekly options available. Cisco. Ooh, I like Cisco. Go-Kart Mozart was checking out the weather chart, seeing if it's safe outside. And little Lurly Whirly kept her hair so curly whirly. Asked me if I needed a ride. All right. 47.90, the 48s. Ooh. Oh, I like that one. Do you see that one? 47.90. Right? The 48s are going for $1.28. I like that one. Nice going. Who did that one? Go-Kart Mozart. Checking out the weather charts. Seeing if it's safe outside. All right, IBIT. Really? IBIT? IBIT. I'm getting tired. My eyes are getting heavy. And my sights were dim. I had to stop for the night. And there she stood in the doorway. All right, guys, go and look at the pages. Hold on. Guys, go and look on the pages he tells you to look instead of guessing. Thank you, Walter. That just makes too much damn sense. You must be a Republican. Oh, that was horrible, but probably true. Please explain what you like about it again. Oh, all right, Lucy, you ready? Number one, it's Cisco. Okay, we all know. I don't know if we all know who Cisco is, all right? But Cisco is a big company. They've increased their dividends consistently. Okay, that's number one. Number two, they're on my list because they have increased for over 20 consecutive years. Okay, that's number one. That's what I like about it. Number two, look at the price I can pay for it tomorrow morning. Okay, here's the bid. Here's the ask. All right.
I can buy it at $47.90 per share. Okay, now a covered call is where you buy the stock, sell somebody else the rights to buy it from you for basically the exact same price you just paid for it. Okay, so if I pay $47.90, I can sell someone at $48. Okay, so I just made 10 cents off of that. But I'm also collecting $1.28 per share just for letting them buy it from me for 10 cents a share more than I paid for it. That's crazy, isn't it? They're actually paying me to buy it from me for more than I paid for it. All right, so what does that look like? $1.28 is the premium, right? Okay, 48, the premium, 128, $1.28 per share. All right, let's try this again. $1.28. Now, what am I paying for it? Well, it's right here. I'm paying $47.90. Divided by $47.90. And that comes to a grand total of 2.6%, or 2.67% to be more exact. All right, so this one's paying over 2.5% for 1 week. Okay, so it's Cisco, number one, it's a good company. Number two, they're paying 2.67% just for 1 week. Now, let's take a look at the other set of numbers. Now, before I leave this, I want to show you this real quick for this. Now, some of you will get this really quick and some of you won't, but here we go. Ready? The last price today, the last traded price today was $47.79. Okay? The bid, what I can sell it for if I want to sell, $47.85. The ask, $47.90. Okay, did you see that? $47.79, the last trade. Bid, $47.85. The ask, $47.90. Both the bid and the ask are both higher than the last traded price. What does that mean? Well, usually, okay, this is not 100% guaranteed ironclad, but usually it means the market maker is going to push it up tomorrow. When the bid and the ask are both higher than the last traded price, the market maker is going to push it up. Okay, so we're looking to buy at the opening. We're looking to sell it to someone for basically the exact same price we paid for, actually 10 cents more than we paid for. We're going to collect 2.67%, which is over 2.5% for 1 week. And the market maker is getting ready to push it up. And we haven't even looked at the chart yet. So let's take a look at the chart. Okay, here's the 1 year chart. First thing I want to see, there's the high. Here's the low. Okay, it was here a year ago and it's here now. Okay, high, low, where was it? Where is it? Where was it? Where is it? Okay, that's 90. That's the 1 year. So let's take a look at those numbers. A year ago, we opened up at $45.98. A couple of days later was the bottom of the year. $45.70. Bottom of the year was almost a year ago. Okay, the high of the year right here. That was $58.19 on the end of August. The end of August, $58.19 was the high of the year. Okay, the bottom of the year, the high of the year, and now she's dropping down. Okay, so let's continue to take a look. So the 1 year looks okay. Let's take a look at the last 90 days. Okay, 90-day chart. The high, low, where was it? Where is it? Okay, high, low, where was it? Where is it? BlackRock needs all the houses in America. Yeah, I'm sure they do. Oops. I missed a lot of those. Missed a lot of these questions. Should people get into the 4X as the dividends will be tiny? Yeah, no, sorry, dude. Less capital, yep. 4X is like Wild West. Numbers need a certain multiplier percentage. Lucy, I'm not 100% sure what you mean by that. Bid high, okay. May be going up. I have no idea what you're talking about. Higher. Can the selection process be automated? I don't know. What's the short on the float? It's cyclical. Of course it's cyclical. Everything is. Right? When you have a company that's over 50 years old, you're going to have what's called seasonality or cyclical or cycles. You know, spring, summer, winter, fall. How does the stock react from those times? Right now we're going into summer. Okay, so how does the stock react in the summer? Let's take a look at the 90 days and we'll answer some of those questions a little bit. Okay, the high, the low, where was it, where is it? Let's take a look at the numbers. Okay, 90 days ago we opened up at 49.90. The high 50, 55, and the bottom was 46.60. Okay, great. Now, let's take a look at the last 30 days, because this is the important part, the last 30 days. Short covered prices love to skyrocket. Short covered, I have no idea what you mean by that. Right, 30 days ago was the 30-day high, okay? The 30-day bottom was last week. Okay, she comes down from a 30-day high, hits a 30-day bottom last week. What happens at the 30-day bottom? If it's the 30-day bottom, okay, it has tendency to go up. English is second language, sorry. Oh, sorry, Winona. Didn't know that. Okay, so your 30-day high is way up here, and look where we are. Okay, and the market maker already tipped his hat that he's going to increase it tomorrow. Okay, so this, if some of you guys know what this means, okay, I'm going to write it down. CSCO, and I'm going to circle it. I want to see what it does tomorrow, because that's got a #1 contender for Monday. I like that one. I don't know who gave me that one, but that's a good one. All right, so I like that one. I do. Well, we got time to look at one more. It's 11:20. Got time to look at one more. When shorts covered, I'm assuming covering causes higher highs, higher lows, usually. Bid Y ask equals volume. Okay. Key. You want to do key bank next? All right. Hey, doggy, doggy. Key bank. AEY. 15, 11. The 15's 28. Take 11 off of that. That would be 17. Yeah, that's over 1%. Cool. Key bank is over 1%. Okay, 15.11 is what I can buy it for. I'm losing 11 cents right at the top, selling it for 15, get 28 cents, take 11 cents off the 28 cents, that gives you 17 cents. 17 cents is more than 1% of 15. Ooh, that was a mouthful. Pop. Really, Lucy, what is pop? If key can pop, nice. Oh, let's take a look. All right. Let's take a look at the charts. Okay, the 1-year chart. First thing I want to see. Here's the high, here's the low, a year ago, and today. Okay, let's take a look at the numbers. A year ago today, 968. A couple days later, we hit the bottom at 872. Okay, we ended the year at 1444. Okay, the 90-day chart. It's the last 3 months, okay? 3 months. The high, the low, where was it? Where is it? Okay, let's keep going. 30 days, right there. All right, check that out. Last 30 days. 30 days ago was a 30-day high. About a week later, we have the 30-day bottom, continued up, pulled back, went up, pulled back. Okay, 2 days to the upside. This would be a perfect candidate to jump in on Monday also. But let's see what the seasonality looks like. What does this stock normally do this time of year? Okay, this time of year, what does this stock normally do? For that, we need the seasonality. All right, that's pretty plain to see. All right, there's the blue dot right here, where the stock is. Goes sideways a little bit, goes up, pull back, up. But for the most part, for the next couple of weeks, for the next month, okay, 513, 613, all right, right to the upside. I like it. Okay, everything worked. All four charts, the 1 year, the 90, the 30, seasonality, and the numbers work. Why not? What program are you using? It's not a program. This is actually Think or Swim. It's a trading platform available through Charles Schwab. It's free. Okay, I've been using it for over 20 years. It used to belong to Tom Sosnos, and he created it decades ago. TD Ameritrade bought it from him, and then TD Ameritrade just got bought off by Charles Schwab. All right, Al, let's be the last one. What is the option we are looking at? We're looking at the after money option. Hold on a second. Cisco needs to break 50 before any upside. Okay. Good. The stock price right now, the last traded price, 15.08. The bid, 15. The ask, 15.11. If I buy it tomorrow morning, 15.11 is what I can expect to pay for it. The 15 is selling for 28 cents a share. You're losing 11 cents off the top. You take that 11 cents off of that, and you end up with over 1%. No, wait, I'm talking about the stock you have on the screen. Oh, you said option. You didn't say stock, you said option. The stock is Key Bank, K-E-Y. What time can we do trading? Well, trading is at 9:30 in the morning, every day. Monday, Tuesday, Wednesday, Thursday, Friday, 9:30 a.m. Eastern Standard Time. Who also can't afford shades? I'm not quite sure what you mean by that. And has holes in the wall. Man, really? I lowered the big screen TV. I couldn't reach way up high, so I had to lower it. And I lowered it yesterday, and I didn't fill in the holes yet. Give me a hard time. Yeah, I just got here on Monday. Okay, today's Friday. I've only been here for 4 or 5 days. I don't even have lights in this room yet. Look, I had to string up garden lights. I got to put a ceiling fan in, and then this is my son's extra room. He's letting me do my broadcasting here. And you guys are giving me a hard time. Yeah, thanks. All right. When you place the order, you can sell the same day or next day. What do you think about IEP? I don't know. That's where you pin your enemies to the wall. It's the remnant. Yeah. It's the remnants, yeah. Or is it pin my enemies to the wall? Is that, let's go back. Hold on a second. Is that a problem, people, with holes in the walls? Jeez. I know, really. You know what? I could have left the TV way up there and be reaching up like this. Yeah, no thanks. Is there a downside to sell weeklies on Thursday? Not necessarily so. But the good part about selling next week's, okay, because you're not selling this week. This week ends tomorrow. Tomorrow's Friday. Okay? So you're not selling this week, you're selling next week. And you're gaining an extra 2 days. Now, I do most of my buying and trading on Monday. So the time value that I have is Monday morning to Friday afternoon. Now, if you do it tomorrow morning, or if I do it tomorrow morning, I get tomorrow morning's time value to next Friday's afternoon time value, which is 7 complete days rather than 5 days. So it's a higher time value premium, which is I believe it's the Vega, part of the Black-Scholes pricing, options pricing method. Really weird stuff. He lives with his kids. I don't live with my kids. Jesus Christ, you're taking. Really? I'm here visiting my kid. Don't you listen to anything, or do you just pick and choose what you want to hear? Okay? Usually, I am in Boston where I live. I'm down here visiting my kids. Okay? Now, my son's redoing the floor. We were working on the floor all day. I was outside mowing the lawn. I like doing stuff. Okay? I grew up in the age where we worked. We get up in the morning, son gets up, we work. I'm here hanging out at my son's house. I could go to a hotel, that's just wasting money. I'd rather hang out with my kids and my grandson right across the street. So don't tell me how to live my life. If it doesn't make sense to you, you don't need to be here. Okay, but don't tell me how to live my life. Really? Okay, I don't live with my kids. I'm just here visiting. Ooh, you know what it is? I'm here inconveniencing my kids. Okay? They lived off me for 18, 19 years. Yeah, now it's my turn to live off of them. No, I'm just visiting. I'm not here. I bought LEP on Monday. It's in the money right now. Cool. Nope, I'm not Warren Buffett, that's for sure. Love haters. That's 3 haters in one day. That's cool. They say the more haters you get, the better job you're doing. Okay, it seems so undervalued, plus it pays for some annualized dividend, okay? Target, want to do Target? Alright, Steve Hill, I have second tier stock, blah, 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 blah. Okay, so it's that. They are so nosy. Yeah, they are. Alright, yep, I have a Discord. We have a team update, which stocks to buy. Okay, those people in the Discord are only the paying members of the morning trading group. Not anybody can just join my Discord. You actually have to be invited. As usual. Sir, do you think someone can make it as a retail trader, like supporting a family? Yeah, you can. But my suggestion was to learn as much as you can. But don't give up your primary source of income, because this took me years to perfect. Seriously, it did. I lost a ton of money. I made a ton of money. Okay, I've made more in one day than most people make in a month. I have lost more in 1 week than most people make in a year. Okay, so it has its up, it has its downs. I paid a lot of money for people teaching me certain things. Okay, now you can do it. This strategy I'm teaching you here is the simplest strategy that I know of. It's simple, it's safe, it's predictable, it's consistent. You buy a good quality dividend stock that you do not mind holding for a long period of time, because you just might have to. The longest I've ever held anything is 9 months. Okay, and that was Kimberly-Clark last year. Last year I held on to Kimberly-Clark for 9 months. I held on to Target for 6 months, and I held on to PPG for 6 months. This year, the longest I've ever held anything this year was 3M. I think I held it for 9 weeks. Fine, I didn't lose any money, because that defeats the purpose. Never buy something you don't want to hold long term. Long term is different for everyone. For me, long term is 9 months. That's the longest I've ever held anything. And I've been trading for over 20 years. Okay? So, here's what it is. Can you do it? Yes, you can. Don't give up your day job until you get this perfected to a point where you can walk away from your regular job and live comfortably. I'm a real estate guy. I can tell you one day if it's rentable or no. This is different. Yep, that is true. I've had a bunch of real estate. I had a bunch of real estate all collapsed in the same week. Okay, tenants moved out. Someone destroyed a place. I had a horrible week. I think I lost like $125,000 that week. It was horrible. Anyway, I'm going to ignore that question. Nice. Alright. I'll appreciate if you can make basic video, how to place an order, basic and chart reading. Oh, sunglasses, it's already there. Okay, hold on a second. Okay, the 10-minute trader. Okay, this is my website, which is right in the bio. You'll find my website, the10minutetrader.com. Slide on down to all my social media: YouTube, Twitter, Facebook, Instagram, podcast, LinkedIn, Patreon, TikTok, books by James. YouTube, come over to YouTube, and then you go to the videos. Okay, sorry if I'm in the way, go to the videos. And then you go to the oldest. Okay, here's the little princess, the original 10-minute trader. She wanted to learn how to trade with Daddy was doing at 9 years old. So, teaching a 9-year-old how to trade, it had to be simple because she's only 9. She wasn't a Mensa student. Simple, safe, predictable, consistent, and no way for her to lose. That was a challenge. Rule number 1, never buy something you don't hold long term. Rule number 2, never sell at a loss. Number 3, make sure it has 20 years or more of increased dividends. Rule number 4, weekly options are a must. Rule number 5, make sure the numbers work. Okay, so back to the videos. These are the oldest videos that are available. I've had old videos that are older. I have deleted a bunch of them over the years. Now these, the older ones, okay, dividend investing, the 10-minute trade away with JC Lin. It tells you how to do it. Blah, 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 blah. Finding the EX dates. That was a good one. Trading, where are they? There's a couple of them in here, the older videos. How to set up your trading account, how to chart read. They're all there. I mean, they're like 10 years ago, 15 years. They should be updated, but if I update them, then they lose the dates. And it's important for you guys to see that, yeah, I've been doing this for a while. And I probably should come up with more videos, updated ones. Oops. Getting familiar with Thinkorswim.
Hey everyone, this is James again, coming to you. Going to briefly explain some of the Thinkorswim and the trading platform that we have here. Again, before I can use it, good till cancel. But, which is great. And this is how much we're spending. We're spending $5,000, which is awesome. So, simple enough. We'll try that one more time. Let's go try that one more time. Market Watch. Let's look at...
Alright. Yeah, I'm getting tired. My feet are getting sore. I'm not used to standing for this long a period of time. You guys have a nice night, and I'll see you again tomorrow. Now, those of you guys in the trading group, will see you at 3 o'clock. Now, for those of you interested in joining the morning trading group, we trade every day, Monday, Tuesday, Wednesday, Thursday. Most of the trading is done on Monday. Monday and Tuesday, most of the trading. Friday at 3 o'clock, we jump on just before the market closes, just so we can make sure everybody is profitable and everybody's planning for the next week coming up. I appreciate it if you can make a basic video. All right, how do you write options when you hold it for 6 months? What delta? All right, Vitality, you're asking a question that doesn't have anything to do with this particular trading strategy. Remember what I told you, it has to be simple. Okay, you're missing that point. Okay, it was created for a 9-year-old. I just showed you a video of her. That's when she was 11, but I first showed her when she was 9. It had to be simple. It had to be safe, predictable, consistent, all that kind of nice and fun stuff. So when you start talking about the delta, that means you want to talk about the Black-Scholes pricing methodology for the options. Yeah, that gets complicated. If you want to talk complicated, not here. Because there's some people here that don't understand that kind of stuff, and they want something simple, safe, and easy. Dividend capturing is one of the safest trading strategies there is. Okay? And if you do it right, you can make up to 50% per year or more. Okay? I'm going to make well over 50% per year this year. And the people that are following me on my morning trading group, They actually watch over my shoulder and do the exact same thing if they so feel desire to do so. Now, I don't tell anybody what to do. If you want to watch over my shoulder as I trade, you've seen the trades I've done. Okay, let's go back right there. Okay, these are all the trades I've done this year. Okay, I'm not hiding anything. Okay, you can look them up yourself. Okay, 3M, Macy's, and Key Bank. I made 1.9% that week. There's the trade right there. It tells you right there. At 9:32 a.m., I bought 300 shares of 3M. At 93, I sold a 93 call, got $1.05, well over 1%. 3M, you've heard of 3M, I'm sure. Okay. Oh, Macy's, you've heard of Macy's, I'm sure. KeyBank, you may or may not have heard of KeyBank. KeyBank is one of Warren Buffett's stocks. All right. So that being said, I'm going to call it quits for the night.